Hello friends, welcome to my channel and welcome to another session of USA Weekly Market Report as one more week has gone by and we have seen lots and lots of interesting development that has happened. Uh, Whether you are talking about the infrastructure bill, you are talking about how the stock market has been moving, the positive and negatives uh, analysis as far as the stock market and the job data which has announced past Thursday or Friday. Then obviously about the pandemic and the new variant of the virus which has been you know in a running spree, and most of the developed countries are now talking about that and taking measures accordingly. Now what does it mean? Let me tell you one thing in a simple brief, that you know this kind of viruses won't go through very easily, as this has been there if you are reading any history of pandemics, and after every 100 years we have a human history that this kind of things do occurs. Now you know blaming things, or if somebody done the quoted unquoted the bad thing, then I'm not don't want to talk about that. But the thing is, we all are suffering one way or the another. We all are suffering, and we are suffering very brutally. And moreover, it makes the entire world you know uh, much more partial than it was in the past, because people who have some money or no money, they are in big trouble, and people those who have money, they have more money. So this equality kind of thing is now gone. Now, talking about the market, you need to understand when this kind of things, pandemic things, creeping through after each and every cycle. And meanwhile, I will definitely tell you to go and check the chart of how this delta variant is affecting, and how the third wave looks like. Because it seems, if you can go and Google the chart of US cases or cases across the globe, you will see some sort of surge which is completely visible. So if these kind of things are there in the economy, obviously, the one thing, I'm not talking about the bull and bear market, but the one thing that will never happen is central banks of the global economies will not pull out their measures, their monetary easing, their bond purchases, their OMOs, whatever you may call it as, they are not going to take it back. So understand this thing, that we are in a global liquidity scenario, and some way or the another, liquidity is here to stay for the next 1 or 2 years at least, right? Now, talking about the market, you will see some sort of consolidation that has been going on in all the major indices. If you're talking about Dow Jones or Nasdaq, probably S&P. So there are simply corrections or consolidation. When I'm talking about correction, it's not actually correction, but it's consolidation which is happening inside the range, right? So things looks very positive than it actually occurs, because whenever market falls 1 or 2%, if you are thinking about a bear market and everything is going to close down tomorrow, then it's not going to happen like that. Now, apart from that, we have a US 10-year bond yield which is at 1.3. It's good. Then oil came down to 67.83. That's also good. Then we have VIX. It's obviously propelled up a bit, but it will support the market on both the ways. Right now, one more thing which I want to look at here is the US index. So it went down to I think 92. Then from there it went up by 5.78. So we also need to check it, that as well. Now let's jump into the chart, And the first chart which we are going to look here, so it will be nasdaq. Okay, now I'm doing some analysis on that, so probably you can see the trend that I have already drawn. So this is the daily chart, as you can see here. And if I draw a trend line like this, it is very much visible that how the chart has been moving and where are we right now as far as the trend is concerned. Now you can see the trend, how does it looks like, and where are we right now. See, so this is the thing, as you can see here, right? And the lower end of the range is 14,500 and 14,166. So these are your big support levels. And on the upside, you have a range which is in between 16,900 and 17,750. So these are the two big targets that we are looking at. And talking about the chart and the way the chart is moving, it's obviously it's not going up with momentum, but it's inside the trend and it is moving up. So the one thing that you need to look at here, when it starts to move up like this, what has happened in the past, as you can see here, it moves up like this, or when it moves up like this, then in that case you will see the risk on trade will be back in the market. And the kind of movements we have seen from October or November 2020 till January February 2021, those kind of trades or trend you can see in the market. So you have to wait because it is not moving with that much momentum, because the top line or some stocks are performing, some are not. That's the way it is right now. But it will definitely started moving on the upside, and once it does, you will have some big trends. Now next chart, obviously the Dow Jones. And the Dow Jones, it's much more stronger than anybody can think right now. So let's go to the hourly chart, and you can see here, so without bothering what's happening in the market or in the economy, the Dow Jones is moving and moving with gusto. So this was the previous resistance. And if you are looking at the chart, so the breakout has already happened. Okay, so this was the range consolidation. So this is the consolidation range, and you can see a breakout. Okay, so the stock has been consolidating for the past 1 week or 10 days, and then a breakout has happened above. Oh, actually the resistance was 35,098, but anyhow, 35,189 or 190, and now it is at 35,200. So breakout has already happened in Dow Jones. So you can see now nasdaq is looking strong. Dow Jones, you can see a breakout. So it will definitely have a very positive impact on S&P as well, because S&P is a culmination of all. So don't try to go on the negative side or on the downside of the market. If you don't want to participate, then it's your decision. But so don't even try or thinking shorting the market. Don't do that. Okay. And if you are a professional, obviously you don't require my advice, or you don't need to watch this video or listen to my words. But if you don't know how to deal with that, deal with the market, it would be very helpful for you if you don't try to go on the other side of the river. Okay, so that's the thing. Now let's check it out, the Brent part. So this is the Brent crude, and as you can see, the Brent crude. So if you are looking at the monthly chart, very so I mean for daily chart, obviously You will see, so if I go to the daily chart, you will see the from the highs of $77, it is now at 73, currently trading at $70. But if you are looking at monthly chart, it is simply a start of a downtrend, right? It is simply a start of a downtrend, and when the oil is declining, it will have a huge impact, a very positive impact on the global economy, specifically to those economies which are oil importers. So as you can see right now, how the index has been moving. So this is very good for equity. Let me tell you one thing, because if these kind of things are available and high oil prices will not be there, this is very good for equities. And if you are looking at the momentum, so this is the RSI, and as you can see, this is overbought and it is showing some sort of negative crossover. So this is very much visible. One more chart that I would like you to see is the chart of silver. So this is the silver future chart, and we have seen that it's been consolidating in between. I think so. This is the range. So on the downside, you have $22, and yes. So these are the two support levels. Okay, these are the two support levels, and as you can see here, what you will, so it's very near to its supports, the silver future. So 23.82 and 22.39 or 22.4. So these are your two support level, and in the short term, don't try to go below 22.39. That would be better. Now if you are looking at the chart, what you can see here, so let's go to this one. Now you will see how the trend looks like and how the chart looks like. So because it is very near to its support, and once it started moving back, you have 29 on the cards. Okay, if you want a bit more conservative target, so your first target will be 27.8. So these are the two levels that you need to look at, and once it moves beyond 29.2, then a fresh trend will start. So if you are trying to short the silver, better look at the trend before you are doing something. Now another thing to look at here is the I would say the US 10-year yield, because it will definitely have an impact, obviously, because it has started moving on the upside, right? So what you have here, as far as the trend is concerned, okay, so there is a double bottom kind of pattern that has evolved, and after testing 1.13 twice, it looks like the range has been confirmed. So this is the upper end of the range. Okay, whether it is going towards 1.7 or not, that we need to look at, but for the time being, the range we have here is on the downside we have 1.13, and on the upside we have 1.71 and 1.76. And obviously this will take time, this will take couple of months, because there are lots of resistance levels that you need to see here. Let me draw those levels for you as well. So you have your next target or resistance at 1.35, then you have 1.47, and upper end of the range is 1 point in between 1.71 and 1.76. But the matter of the fact is, don't try to go below 1.13, because once it started falling below 1.13, a further downside pressure will creep up, and this will be good for the bond buyers, not bond yield buyers, but bond buyers, bond purchasers, uh, as well as the equity market, overall equity market. And anyhow, if it is in between 1.13 and 1.7, it won't be a problem, right? So because when it went up to 1.71 in the March, we are in the lows, and the important thing is when it falls down, so sharply, because the cut in terms of, because when the yield moves up, it went down by 35%. So when something moved so sharply and we are talking about bond, then it's not normal, right? So we are not getting benefit out of it, because if you are looking the US market as well as the nasdaq, so they are moving very slowly, and nasdaq, and bigger pardon, the Dow Jones is in consolidation and just moved out. So there are lots of things which you need to see over here. Now, the last chart is very important, because I want to end my conversation from to the point. So I have started my conversation with the new virus variant, and I also want to show you the chart. So this is the chart for US, and you can see how the cases has moved, and as of 6th of August 2021, you can see the chart and how it's been moving. So it is not a good thing in terms of society, but stock market don't factor in the same news again and again. And mind you, when the cases are rising, again, you can't see the central banks taper down the bond purchases and other kind of things. So as far as the stock market is concerned, you will definitely see some new highs. That's what I trying to say. And obviously, the most important thing here is we now know how to at least deal with that in the past 1.5 years of experience. So things are looking good as far as the stock market is concerned, and liquidity is going to be the key which will drive the market further on the upside. So this is the end of the video. If you like this content, do share your thoughts in the comment section and subscribe my channel. Lastly, take care of your family and friends.